What drives homeowners insurance premiums? You want to stay tuned. If you're purchasing, refinancing, or reshopping a quote for your homeowner's insurance, you want to watch this video. So the number one thing that is looked at when you're purchasing a home is the age of the home. If you can think about it, the plumbing, the electrical, the older the home, the more likelihood that those things have wear and tear and are more easy to spark a fire or have a leak to, flood the house. So those are things definitely that the insurance companies look at first and foremost. The next thing that they look at is the roof age. So if the roof is older, it's more prone to leaks, more prone to issues for things entering the house, and then you'll have a claim because the house is going to flood because a big rain, you're only one big rain away from damage to your house. So the age of the roof is a very big thing. Now roofs, depending on the composition of the roof, roofs usually last 15 to 20 years. Again, I'm definitely not an inspector, I'm not a professional, but you definitely want to get the home inspected at the time of purchase. Don't forego that inspection. And an inspector will tell you all of these things. The other thing that the insurance company is going to look at is they're going to look at the number of claims. If that home has had any prior claim, unfortunately, you will inherit those claims. So an insurance company is going to have a different risk assessment on a home that has had claims versus another. So that's very important. There's apparently a database somewhere where claims are traded and recorded throughout companies. So any company that you're quoting with on insurance with that address, they're going to be able to pull up, a prior claim to that home. Now, keep in mind when you're shopping insurance, and you definitely should shop around with at least 2 to 3 carriers, you want to make sure that you know that you can have anywhere from a 1 to a 5% deductible, or at least when you're obtaining a loan, that's the requirement that the lender has. You can't have more than a 5% deductible. So what that means is if your deductible is 1% of the replacement cost, let's say the home is $100,000 replacement cost. I'm just doing this for the easy math. That means that on a $100,000 replacement cost, that 1% deductible would be $1,000. A 5% deductible would be $5,000. So translate that to the price of the home that you're purchasing, and just know that if you want to try to lower your insurance premium, you can increase the deductible on the property. So I hope that you found this informative. Feel free to ask me some questions down below in the comments. Like, share, and subscribe. We've got over 300 videos on my YouTube channel, Loan with Jen, to help guide you through the homeowners process. If you're in Texas, call me. Talk to you soon.